Hello everyone, welcome back to Lab4crypto. The market is in a boring state. We saw Bitcoin moving sideways for the past couple of months, and we see people starting to think that actually the top was in March, and as now we have a possibility of entering a recession, that Bitcoin is going to continue to go down, and therefore it's better to exit completely the market. And that is some questions that I get all the time. So I wrote a blog, which I will leave in the description below, which I explain my thesis around the current state of Bitcoin and how we can understand the market shift that is coming in the next couple of weeks, 2 months. And I'm going to go through this blog with you today and explain each point. But of course, you can read it because it's just 4 minutes, and I think it's very important for you to understand this market shift, as maybe in the last 4 years is the most major shift that if someone understands it, it's going to bring you a lot of happiness in the future if the market goes as I think. Do not forget also to subscribe to our blog, which you can receive on your email. My analysis is completely free, and you can always be up to date with the market. And if you like what I'm going to say, you're going to always have a perspective from my side on how I see the market and how I navigate the market. If we just check the Google Trends, you will see that the market now has no interest in Bitcoin and in crypto in general. This is the 5-year time frame, and you will see on the y-axis on the right side, we have the interest of people when they type in the word Bitcoin in Google is in levels that we saw when Bitcoin was 16K. So in December 2022. And that is a very good point, in my opinion, because this is where we already saw Bitcoin moving from 16 to 60K when the market is in this boring state. But you need to know if actually it's going to go to higher values or lower values. And let's go and follow the structure of the block, and I will explain each point because I'm going to touch as well on the global liquidity, on interest rates, and how these factors are going to act positively or negatively in the crypto market and in risky assets in general. So if you're in stocks, I expect the same behavior. So what I did to understand if Bitcoin actually showed any worrying some signs that we have reached a bubble and therefore we should continue to go down, and we have reached the peak in March and April. And if that was the case, where I expect Bitcoin to go in 2025. But first I wanted to research and see if Bitcoin is showing us and is signaling any worrisome signs. And how I did that, I use a reference point of bottom, peak, and halving. And what I did, I calculated the return of investment, the ROI, if someone managed to buy Bitcoin on the exact bottom, on the peak, and on the halvings on the previous cycles, and compare it with the cycle that we have now. Because Bitcoin had pandemics, had a crash, had whatever in these 15 years. And if we just see the numbers and we don't care about the day-to-day news, I wanted to see what is the ROI of Bitcoin currently compared to previous cycles. And we can see these lines, which I have denoted with various colors. And if we calculate the ROI of Bitcoin from the bottom, which in this cycle is the lilac line, we can see that is very close with the previous 2 cycles. And to be honest, I care more about the last 2 cycles compared to the first 2, because Bitcoin was not a mature asset on its beginning. It was very speculative. People didn't know exactly what it's going to do. And that's why you see these massive gains at the beginning for people that they understood more compared to us, which we entered in 2015 and 16 and not in 2010 and 12, about what Bitcoin power is going to be in the future. And that is why you see they have a great reward. But of course, as Michael Saylor says, you get Bitcoin on the price you deserve. So that's why for them, they had this massive return of investment. But even if we take the last two cycles, we can see Bitcoin be exactly where it should be. It's very in tandem with the previous two cycles. And now we can expect an increase like the last two cycles, hopefully. And I'm going to dive to that in a bit. But the main takeaway here is that Bitcoin does not show any worrying signals. If we check the ROI of Bitcoin from the cycle peak, so imagine that someone bought Bitcoin in November 2021 when Bitcoin was 16.7K, and I'm tracking its ROI daily. I can see that he managed to break even when Bitcoin reached 67K recently, and now it's just 10% below that value. But the important point is that if we check the peak-to-peak ROI of Bitcoin, we can see that Bitcoin actually is ahead of the previous two cycles. And that makes sense because even if we check the graph below, which we calculate the ROI of Bitcoin compared to halvings, we see that Bitcoin is, the current cycle is below the last cycles. And that makes sense to me because for the first time we had Bitcoin reaching an all-time high before its halving. And that was due to the bullish news from the Bitcoin spot ETFs when we have BlackRock and Fidelity trying to increase the adoption of Bitcoin, which that is very bullish. And that brought Bitcoin to reaching an all-time high value before its halving. Because actually Bitcoin reaches an all-time high 12 to 16 months after its halving, not before. And that is why you see this decrease until now. So that graph is not worrisome for me. And the last two ones are perfectly making sense to me. The last metric that we can address easily with no very complicated quant models, if Bitcoin is it was actually in a bubble phase in March, and that's why it reached an all-time high, and now we should continue seeing Bitcoin going to lower values, as many people think, is the deviation of the current price of Bitcoin from its fair value calculated using the power law fair value model. So this model is available in the graph, in the platform, and easily what that does, it calculates the deviation of the current price of Bitcoin from its fair value calculated from the power law model. And you will see this red line is basically in the middle of the price action of Bitcoin. And when we see these exponential phases, when Bitcoin shifts from a power law model to an exponential one in this region, if we calculate the deviation of the blue line from the green line, we end up with this amazing graph. This graph is showing that when the deviation of Bitcoin is between 75 to 100, we can expect Bitcoin to enter a bubble phase, and therefore the price could collapse in the coming days or months. And in March, when Bitcoin reached an all-time high, February, March, I think, somewhere at this period, Bitcoin only just moved barely above its fair value, and currently we are at minus 35% from the fair value. Therefore, this peak does not resemble any previous cycle peak for Bitcoin, and I don't think that actually Bitcoin as well is in a bubble phase. Because if we zoom out a little bit and think that actually Bitcoin was in 67K in 2021 when we had interest rates at basically zero, and now we are at 5.5, and Bitcoin is still at that prices. So imagine what's going to happen when we have the interest rates drop to very low values, and again we see the global liquidity increasing. But I will touch on that point in a bit. Of course, we have many other models to see if actually Bitcoin experience any top signals, and you can explore them in the platform. But the main point is that just using this model, we see Bitcoin not showing any signals of top in February, March this year. Now, why I think that we are approaching the most important 4 months that we are going to experience in this bull cycle. And the factors are two, is the US elections and the quantitative easing. Why US elections? What I did, I went and calculated the Bitcoin ROI if someone bought Bitcoin on the first of that year, and I was calculating its ROI daily. And I wanted to see if there is any point where actually we see an increase in ROI that is correlated with the US elections. And what you can see in 2012, 16, and 2020, when we had a US presidential elections, Bitcoin had an increase of 100 to 300% during the Q4 of that year. This dotted line, the vertical line, is showing the month, the election month. And it's clear, I think, that Bitcoin see this price appreciation in the end of the year. That's why you see many analysts predicting that Bitcoin could reach 100K by the end of the year. I think they are using this graph, among others. So this year, I expect also the US elections to play an important part in the price action of Bitcoin, especially if we have a president which is a pro-crypto. That will boost the adoption of Bitcoin and crypto, and it will act as a turbo boost, I think, on the price appreciation of Bitcoin. Now, global quantitative easing and global liquidity. If we go to this graph, you will see that this yellow line, which basically is the balance sheet of all major central banks around the world, when that is expanding, we can see risky assets like Bitcoin increase in price as well. Of course, we have periods which these two lines are decoupled, but this is going to be a video for another time. What I want you to be focused on is that when this yellow line compared to price of a risky asset is increasing, also the price of the risky asset is increasing. And when that is decreasing, both are decreasing. So they're positively correlated. Now, if we check 2019, when Bitcoin experienced rate cuts, that's why I'm using this comparison, you will see that Bitcoin on the first couple of weeks, not couple, I think was, imagine 1 or 2 months after the first rate cut, we saw Bitcoin moving to lower values. And the reason is, although it's counterintuitive to a lot of people that, okay, because we have quantitative easing, that means that the global liquidity is going to be increased. People are going to borrow easier. Therefore, we should expect Bitcoin price to go higher. What you need to know is that the market is always front running what we are thinking. And I think an easy thought experiment to understand why that is happening is that I will tell you the term why that is happening, and then I'm going to tell you an example. The market wants to be sure that we have avoided a hard landing, we have avoided a recession, and then go to a risk-on environment and start to speculate more and move capital to risky assets. But for them to know that the Fed have did a good job after the rate cuts, they are monitoring the growth of the economy. And if they see that actually the economy does not show any signs of that we are going to enter a recession, they flip again to a risk-on mode, and that's why we see capital flow to risky assets. And imagine that the economy is a bolt and you try to tighten, and this is basically what the Fed were doing. They are increasing the interest rates so they can reduce the demand of some assets in our day-to-day life to reduce inflation, because everything is supply and demand. So when Fed were tightening the economy, the market does not know if they manage to find the perfect point which they're going to manage to do a soft landing. And think that you were the Fed, and when you tie the bolt, you always go a little more. You don't know the exact point where the bolt is going to be perfectly is going to be perfectly tightened. Therefore, in this period, which usually is between 75 to 100 basis points reduction in the interest rates, the market wants to be sure that the Fed did a good job and then flip to a risk-on mode. Therefore, for us, it's better to study with the market these 2 or 3 months where the economy is moving, and our job is to catch this price appreciation and be able to take advantage of this increase in global liquidity. And what's happening usually in this scenario, you will see also Bitcoin increase, double or triple in price, but you will see altcoins making 10 to 20x because the market is shifting from the low risk to the high risk environment. Because Bitcoin is the only asset that actually had reached its all-time high, and 99% of the altcoins, we had some that managed to do it, but none with this price history like Bitcoin, which is 14 years old. Most of them are much younger. And Bitcoin managed to surpass its all-time high when we were in the low risk environment. And imagine this arrow was flipped. You see capital flow from altcoins to Bitcoin to protect, because your job as an investor is not only to increase your capital, it's also to protect it. And when we have the increase in in global liquidity and quantitative easing, I expect capital to flow from Bitcoin also to altcoins. But of course, Bitcoin will increase as well, because when we have an asset that is adopted by institutions do not care about low cap assets, which they cannot exit very fast, because they care also about liquidity risk, which I explained in a previous video as well. But imagine that institutions and high net worth individuals usually are perfectly fine with 2 to 3x, and they don't want the risk that altcoins are giving. The point is that, yes, you can see this exponential gain when we enter the final stage of the bull run, but this stage can be also very risky, because you can have your gains be vanish in a period of couple of days if you don't manage your risk well. And that was actually my signal to build this quant risk tool, which encompasses on-chain data and off-chain together to bring you a tool which it can help you identify these peaks when Bitcoin, for example, this is a graph for Bitcoin, which you can see from the platform as well, which Bitcoin reached these exponential phases, and therefore be able to exit the market and be able to allocate again if you want to be in Bitcoin or in other altcoin whatsoever, to allocate more capital when the market is in a low risk region and exit in a high risk region. I have a video which I explain many strategies that you can utilize this tool, but in the platform and in our Telegram Premium, you can discuss ideas and strategies moving forward. Lastly, the question that I get usually is when altcoin season. And the altcoin season for me will come when Bitcoin breaches its all-time high, and when we see Fed reducing 75 to 100 basis points the interest rates. Because it's going to be a point which will see people actually starting to feel the impact of the reduction of interest rates. Because imagine you are a company and you want to take a loan, and the reduction was just 25 basis points, and therefore from 5.5 now is 5.25, you will not going to feel the impact until you're starting to see a reduction in interest rates between 75, 100 basis points and more. We already saw major economies around the world already starting to reduce the interest rates. This is the European Union, and already they did a 25 basis points reduction. And in US, the first one is expected in September 18th. But on the first weeks of the reduction of the interest rates, you can expect some turbulence in the market, because, as I said, they want to be sure that it's going to be a soft landing and not a hard landing. In this region, you can expect Bitcoin revisiting 50K, 54. And I think that is going to be the window, but it's remaining to be seen. And your job now is to see and find if actually this region, it was a good time for you to accumulate before we see this explosive run. And this is what I explain in detail in the platform and in Telegram about what I think, which I think it will be. But of course, the data, because are dynamically changing every day, we are daily checking thousands of charts to come to a conclusion. Because as I said, it's going to be, imagine that you managed to enter Bitcoin before in the last cycle when Bitcoin, you didn't manage to get the COVID crash, but you got Bitcoin at 6K and then it went to 67. And even if we check some altcoins, which they did 20, 30x, not just 10x, it was going to be one of the best decisions of your life. Therefore, you will need to study as much as you can and prepare to see if we see Bitcoin moving to lower values, if that is going to be a good time from you to accumulate at that point or no, before we see a price increase like we saw in 2021. Let's go back to the blog. So yeah, to conclude, I think that we are approaching this inflection point, which Bitcoin dominance is going to be reduced. People are going to start to move to a high risk mode, to a risk on mode, when we can see some capital flowing from Bitcoin to altcoins. But do not, when I say it's going to flow, that does not mean that Bitcoin is not going to reach six figures. That means it's still going to go up, but it's going to lose some of its steam to altcoins. But that is only going to happen when we enter and the market is sure that we can enter a high risk environment. So it's very crucial for you to know when this shift is going to happen. And my goal is to actually closely monitor Bitcoin. And then, because I noticed that actually Bitcoin is moving, has a head start from a price increase, and then this capital is moving to altcoins. A strategy that you can do is actually stick to BTC and then move some of your capital to altcoins and get a benefit from both price increases. But to do that, you need to be as educated as possible and make a strategy, which I have. If you check the video that I have on YouTube as well on the risk metric, you will find out many strategies that I have showed there that you can manage to get both if you are into the crypto market, and how you can optimize your portfolio. As I said, again, do not forget to subscribe to our blog, which you can immediately receive notification when I publish our free newsletter and blog with insights about the market. But also do not forget to give us a thumbs up and leave a comment in the YouTube video if you found value in it, as that helps us a lot grow and show our insights to more people and help us much more people adopt crypto and Bitcoin and educate ourselves as much as possible. And that is why we have built the platform to give video explanations, information, and give as much knowledge to people as possible to get this price appreciation and knowledge. I hope again you liked the video. Until next time, bye bye.